Hey, welcome to this week's video. Are you thinking of buying an electric vehicle or plug-in hybrid? And are you looking to benefit from the new $7,500 tax credit? If so, you have a lot to consider thanks to the newly enacted Inflation Reduction Act, including if to buy the car in the name of you personally or possibly in the name of your business. In this video, we'll go through 9 things you should know, including how you might get around some of these new rules. So the maximum credit is $7,500 for fully electric cars or plug-in hybrid vehicles. That applies to both business and non-business vehicles. That remains in place through December 31st, 2022, subject to one significant change. And that change is electric vehicles purchased and placed in service after August 16th of 2022 qualify for the tax credit only if they are assembled in North America. The North American assembly requirement cuts the supply, leaving only 23 qualifying electric models. I'll leave a link to a list below that you can check out. But note the instruction at the bottom of that list is that you should verify the build location using the vehicle identification number. Some of the 23 qualifying vehicles are built in North America, but others are not. Hence, you need to check the build location by using the vehicle's VIN number. The credit is phased out once a manufacturer hits 200,000 vehicles. Many of the most popular vehicles have been phased out, including those manufactured by Tesla, GM, and Toyota. I'll leave another link below to a list of electric vehicles that are assembled in North America, but for which no credit is available because of the 200,000 unit sales cap. If you enter into a written binding contract to purchase a newly qualifying electric vehicle before August 16, 2022, the rules in effect before the enactment of the Inflation Reduction Act continue to apply. This is so even if you place your electric vehicle in service on or after the August 16th date, but before the end of the year. This also means the pre-ordered electric vehicle does not have to be assembled in North America. Entering into a binding contract means that you have signed a formal purchase agreement and made at least a 5% non-refundable deposit. Being on a waiting list for an electric vehicle before August 16, 2022 wouldn't cut it. So starting in 2023, a new clean vehicle credit goes into effect and continues through the year 2032. Although the credit maximum remains $7,500, the credit is massively changed. Due to the changes, many taxpayers will no longer be able to claim the credit, and there may be fewer electric vehicles available that may qualify for the credit, but that may change as time goes on. Business taxpayers have a decision to make when buying an electric vehicle in 2023 or later. They can choose either the new clean vehicle credit or the new qualified commercial clean vehicle credit. And more on this later. The old credit was limited to the sale of 200,000 electric vehicles per manufacturer, but the new credit eliminates this cap. Thus, for example, electric vehicles manufactured by GM, Toyota, and Tesla can qualify for the credit if they meet the price cap and the other requirements. The maximum credit for 2023 and later remains $7,500, but it has 2 components. A $3,750 credit if the electric vehicle complies with the domestic sourcing requirement for critical materials in the battery, and another $3,750 credit if the electric vehicle satisfies the domestic content requirements. So according to the Alliance for Automotive Innovation, no electric vehicle actually that's available for purchase qualifies for the full $7,500 credit on January 1, 2023. But electric vehicle manufacturers are working to change this. The critical materials requirement may prove particularly difficult to comply with over the next few years. The domestic content requirements, on the other hand, should be easier. Thus, there may be a number of electric vehicle models that qualify for only the $3,750 credit, at least initially. However, the business buyer avoids the component problem when using the qualified commercial clean vehicle credit that we'll talk about a little bit later in this video. The credit may not be claimed by taxpayers whose modified adjusted gross income is more than $300,000 for joint return filers and surviving spouses, or $225,000 for head of household, or $150,000 for unmarried taxpayers or married taxpayers who file separately. The business buyer avoids this cap when using the qualified commercial clean vehicle credit, which I will talk about a little bit later. The tax code does not allow the new clean vehicle credit if the manufacturer's suggested retail price for the vehicle exceeds $80,000 for a van, or $80,000 for a sports utility vehicle, or $80,000 for a pickup truck, or $55,000 for any other vehicle. The IRS will provide guidance on which electric vehicles fall within these categories. Note that the caps are cliffs and not phase-outs, meaning the credit is totally eliminated if the applicable manufacturer's suggested retail price is even $1 over this cap. The business buyer, on the other hand, avoids the dollar cap when using the qualified commercial clean vehicle credit. The credit is designed to encourage the manufacture of electric vehicles in the United States. Thus, it imposes a domestic content requirement on critical minerals and components used in the electric vehicle batteries. The IRS will issue guidance on how these rules will work. The new credit requires that a specific percentage of critical minerals be sourced in North America or from countries with which the U.S. has a free trade agreement. The sourcing percentage rises from 40% in 2023 to 80% in 2027 and later. In addition, a specific percentage of battery components must be manufactured or assembled in North America. The percentage rises from 50% in 2023 to 100% in 2029 and later. Beginning in 2025, any electric vehicle with battery minerals from a foreign entity of concern will be excluded from the tax credit. The same rule applies starting in 2024 for battery components. The question really is will these changes drive up the cost of electric vehicles? I'm not sure, but it's definitely something to keep an eye on. The final assembly of the electric vehicle must occur within North America. In other words, the component parts must be put together at a plant or factory located in the United States, Canada, or Mexico. This could be an easier requirement for electric vehicle manufacturers to meet than the battery sourcing rules. Starting in 2023, for the first time, a clean vehicle credit will be available to individual purchasers of used electric vehicles. The credit is the lesser of $4,000 or 30% of the purchase price. To claim the credit, the individual taxpayer must purchase the electric vehicle from a dealer and not from a private party. In addition, the purchaser's adjusted gross income must be less than $150,000 for joint return filers, or $112,500 for head of household, or $75,000 for single taxpayers and married taxpayers filing separately. The used vehicle credit may be claimed only once per used electric vehicle, that is, by the first purchaser of the used vehicle. Additionally, the purchaser must not have claimed a used electric vehicle credit during the prior 3 years. Used electric vehicles don't have to satisfy either the domestic content requirement for the batteries as new electric vehicles or the North American assembly rules. Starting in 2024, an electric vehicle purchaser may transfer their credit to the dealer, who will in turn offer up to a $7,500 cash rebate or price reduction, or treat the purchaser as having made a down payment in the amount of the credit. This way, electric vehicle purchasers will benefit from the credit immediately rather than having to wait until they file their tax returns. If you purchase or lease an electric vehicle for business use in 2023 or later, none of the rules discussed previously will apply. But the business electric vehicle must be propelled to a significant extent by a rechargeable electric motor with a capacity of not less than 7 kilowatt hours for vehicles with a gross vehicle weight of less than 14,000 pounds, or a 15 kilowatt hours for vehicles with gross vehicle weight of 14,000 pounds and more. Also, the credit is for each vehicle you purchase and is not limited to one credit per taxpayer. Thus, you can claim multiple credits if you purchase multiple electric vehicles in the same year through your business. To be eligible for the credit, you must include the electric vehicle's identification number on your business tax return. However, if you claim the commercial vehicle credit for an electric vehicle, you can't also claim the clean vehicle credit for the same vehicle. In other words, there's no double dipping on the credit. The commercial clean vehicle credit is equal to the lesser of 15% of the vehicle's basis, or 30% if the vehicle is fully electric, or the incremental cost of the vehicle, which means the excess price of the electric vehicle over the price of a comparable non-electric vehicle. The maximum credit is $7,500, the same as the personal credit, with one exception. The maximum credit goes to $40,000 for electric vehicles with gross vehicle weight of over 14,000 pounds or more. So you need to plan which is best. For example, if you purchase a Tesla Semi in 2023, which is expected to list for $150,000 and have a gross vehicle weight of well over 14,000, you could get a $40,000 credit. Not bad if you're a big company looking to replace your gas guzzlers with electric vehicles by having Uncle Sam kick in some money. For business, the electric vehicle must be depreciable property to qualify for the commercial clean vehicle credit, but you need not use it solely for business. What I mean by this is the sole proprietor business, the basis equals the business use component of the electric vehicle. Proprietors determine the basis using the business percentage, and that can come from evidence from their mileage logs for that vehicle. So for example, if you purchase an $80,000 fully electric van and you use it 25% for business, your business depreciable basis is $20,000 and your maximum commercial clean credit is $6,000, which is 30% of that $20,000. But if you claim the personal clean vehicle credit, you'll get the $7,500, which you need to allocate, claiming the 25% as a business credit and 75% as a personal credit. The corporation, on the other hand, does not reduce the basis of the vehicle for personal use. It uses 100% of the cost and then uses IRS regulations to allocate personal use to the employee, including the business owner. So some key takeaways. The credit remains in 2022, but after August 16, 2022, it needs to be assembled in North America. Starting in 2023, price cap and income caps and sourcing requirements take effect. The 200,000 manufacturer cap actually goes away starting in 2023. And there's a new used credit that may be available to you starting in 2023. Also in 2024, you can transfer your credit to a dealer, which allows you to get that credit faster than having to apply for it in your tax return. And you can qualify for this credit as either individually or as a business credit. And the commercial clean vehicle credit for businesses avoids some of these rules, so it may be something worth considering. So that's it for this week's video. If you got any value out of it, it'd be great if you hit that thumbs up button, as it really helps me out. And if you're not a subscriber, it'd be great to have you as a subscriber.